Welcome back, everyone. This is Seewing Yee, and my guest is Julie, and we're gonna go through another video topic. And you guys don't know what it is yet. Let me share my screen and let's go over this topic. Here we are. All right. So, Julie, you are putting yourself in the shoes of a real estate investor, whether you are a newbie real estate investor, whether you are an experienced investor, the same thing. Let's say you are living in California. Doesn't matter where in California, high price metro, like I live in San Francisco Bay Area, and you live in the heart of Los Angeles.
Right.
And of course, California investors is very difficult to cash flow to buy properties in California because the price is so absolutely so high.
Absolutely.
Or we can make another assumption that you putting yourself in the shoes of an investor. You living in let's say Northeast in New York City somewhere, or you live in a high price market like in Chicago or Miami, whatever, wherever you're from, where you really have to get out of your local neighborhood because there's no way you can buy cash flow properties in your backyard, if you will. And so you decided to venture into out of state market, buying long distance, if you will. Let's pretend that you have done the following research. You have found a company. You have found various turnkey provider in different markets. Let's pretend you have done 2 months of research or 3 years of research or 5 years of research or 10 years of research. Let's using the assumption that you're part of a network, whether you're part of my network or other investment club network, that's fine. And here are the following. You have identified the various markets you want to purchase. These are turnkey property. The assumption is that turnkey providers in all these markets have all these turnkey properties ready to go. They have done all the research and due diligence for you, and it's a matter of picking the properties. So I'm going to use my network, for example. So my network have several thousand members. Most of them are in California. Let's assume out of my several thousand members, let's say 50% of them are qualified to buy these turnkey properties with a 25% down regular investment loan, or they can use their self-directed IRA to purchase this type of properties. Let's go through it real quick on some of the properties that are available in the various markets. All right. So let's quickly go through this first property or the $67,000 property in Niagara Falls at 25% down payment. You still have a little bit of cash flow, even at 7.5% mortgage rate. So this first property is under consideration. The second property here in Alabama, and this property is around $190,000. It rents for $1,500 to $1,600. Cash flow, couple $100 per month. So it's a good areas in Alabama, various cities. So this is a turnkey property, all ready to go. And so, yeah, this is the property right here. The pro forma, $190K. The rent is $1,850, and the 25% down. If an investor will buy down the rate to 5.75%, buy down the rate, maybe you pay 3 or 4 points to buy down the rate. With a 5.75% mortgage rate, your monthly net cash flow is $589, which is pretty nice on this single family home. So
very nice.
Yep.
Very nice.
Yep. And a third property, you'll venture into Florida, in Central Florida, Ocala. You have identified another property, new construction single family home in Ocala, 1 hour north of Orlando, 264K. You're able to take advantage of the builder incentive. You're paying down 3 or 4 points to lower your mortgage rate to a whopping 4.75%. That is amazing. Even though the mortgage rate for the general consumers out there right now is like 2%, whatever, right? Which is crazy. Okay, then you do your due diligence. The monthly gross rent is almost $1,700. You put down 25% down payment, which is $84,000 total out of pocket. At the end of the day, your monthly cash flow is $299. Only the first year projection cash flow, but then you move down to the Southwest Florida, Cape Coral, for example. You have identified another turnkey property, a new construction, $325K, and it rents for $2,400, and you're able to get a 25% down payment with a mortgage rate around 6.5% to 7%. You're still able to go monthly $423. And then you go to another location. You go to Ocala once again to buy this, consider this duplex. This brand new duplex only costs $379K.
Nice.
Once again, you're crazy. You're able to get a amazing builder incentive, 4.75%, 10-year fixed. First 10 years is fixed rate. After that is adjustable. Then the two doors, the 2 unit combined for almost $2,600 monthly gross rent. At the end of the day, you put 25% down payment. At the end of the day, you still can cash flow net monthly $526. Yeah, excellent. Then you move up to Jacksonville. You're able to find a 4-plex, brand new 4-plex in Jacksonville for $799K, $800,000. Okay. Once again, you're able to get this amazing builder incentive, 4.75%, the first fixed rate, first 10 years. Your monthly gross rent is $5,300. In fact, you went through a previous scenario where you can buy the one in South Texas for $535K.
Yeah.
$300. See, you see the bigger difference? So now it's still a good bargain because you're getting able to get a lower rate. Oh, by the way, on a previous 4-plex analysis we did on South Texas, that $1,000 monthly cash flow for the 4 doors is based on 7.3%.
Oh, okay.
Yeah, because there are no buy down incentive available with that builder in South Texas. But that's okay. You know why that's okay? You know the philosophy I use, which you heard it before. You date the rate, but you marry the house.
Absolutely.
So that 7.3% 4-plex on the South Texas we went over. That's just temporary. When and if the rate comes down, we don't know. We don't know when in the future, in the next a year, 2 years, 3 years. If the mortgage rate come down to 6.5% or 6% on that 4-plex we discussed, you can cash out refinance and you can increase the monthly cash flow from $1,000 to like $1,400, whatever, right?
Right. Absolutely.
Yeah.
Absolutely.
Okay. Let's get back to
Good
this.
deal.
Yeah, good deal. Getting back to this scenario, even with this number, with the $5,300 on all 4 doors, gross rent, with this price, with the mortgage rate the way it is, with 25% down payment, you can still cash flow on this 4-plex in Jacksonville, Florida for excess of $1,000.
There you go.
Right?
That number again. Yeah.
That's right.
$50, $260 a door. That's great.
Yep. Exactly. So this is the real estate portfolio that you're seeing. Now, here's the challenge. You've been part of my network for a while, for a few years. And of course, great. You scale your real estate portfolio to 6 rentals, which is amazing. Two of them you purchased with the IRA. The other 4 rentals, you and your husband purchased with the financing, 25% down payment. There's no need for you to go deep into that, but we discussed that on other videos that you have done with us. So put yourself in your shoes. Giving this several markets, turnkey market is the best turnkey, best high growth markets that we have available, all cash flow. I mean, with all the negative headlines out there, and yet, people still not enough people are taking action out there. So let's get back to my network. Okay. My network consists of mostly California investors. I would say some of them have done very well, a small percentage of the network. So my network have been around for 20 years. A lot of my members, I provide daily educational video newsletter content every morning, right?
Right.
Every morning.
Yep. Yeah. Every day I see something from you.
Exactly. So I provide great free education, right? But not only we promote certain markets like the cash flow, like the pro forma, the market that you saw and everything else. I provide educational content on real estate investing on all aspects, how to everything. And yet, out of the several thousand members, only a handful are taking action. Put yourself in the shoes. I know a lot of them qualify to buy, but by the way, they have a good financial profile.
Sure.
So, some of them, for whatever reason, they do not qualify. Either with the credit's not good enough, they don't have enough down payment. We get all that. But these members of my organization, we say, one must be educated, must learn about risk investing before they take the plunge. I get all that. A lot of my members, I see their emails, and I know who they are over the years. They click on my daily newsletter videos, and they see what's going on for the past 20 years. And especially for the past 13 years, ever since the last housing crash, the last housing crash took place in 2009, and 2010, 2011 was the best time to buy real estate when the prices are so low. So prices for the past 13 years have consistently increased all over the country. When I was promoting these kind of properties back 13 years ago, a single family home in Florida were like $80,000 at that time.
Right.
Now that $80,000 home today probably costs $400,000, right? So that's the difference between taking action, buy real estate, and wait instead of wait to buy real estate. So it's beyond the numbers. So
Right.
from your perspective, in your shoes, why giving this almost like a platter of products available, all done for you, all pre-screened, all the properties, turnkey, property management, the whole 9 yards, the probability of success when somebody take action are very high. I know there's always risk associated with any kind of investment, and real estate is no different. The risk of vacancies, the risk of somebody damaging your property, the risk of economic downturn in a certain market where you can potentially do bad on your real estate investment no matter what. I get all that. Whether you're a member of my network investment club, if you will, whether you're doing other analysis of real estate, because with the advent of technology, with the advent of the YouTube video and everything else, that there's no shortage of information out there. You can Google, you can click on any button, you can find almost anything, not just real estate. So having said that, from your perspective, why the majority of investors, even though they've been educated consistently over many years, even though they financially qualify, why these people are still sitting on the sidelines doing nothing?
That's a really good question. I think with the onset, you said, of so much information, I think people analyze until they're paralyzed. It's like because there's always more information you can find out. There's a never ending amount of information on the internet. And depending on what your goal is, you can find information to validate moving forward, or you can find information to negate moving forward, because there's always noise out there. But I think you have to just decide to make the commitment. And I think most people are just not committed to the process. It's not about the investment. It's not about the house. It's not about the neighborhood. Anybody that's been on the earth for more than 20 years knows that there's value in buying real estate. There is value always. I don't care if it's in Alaska. I've never been there, but there's always value. I think you have to make the commitment. And I think a lot of people are afraid. And I think you just have to do it afraid. I don't risk money. I am the one that handles the finances in our family. And I don't believe in risking money. Like you said, there is a level of risk in any type of investment. But what I do is I do what's called a calculated risk. I decide on what the goal is. And Mark and I had very specific goals. I do the research. I eliminate as many potential problems as possible. And then I pull the trigger. And I don't go into it expecting that it's going to be perfect. You're not going to have any problems. It's not like we're buying a pair of shoes that you can take back. We're going to make a decision for a long term. So you have to be willing to take the risk, but you also have to understand there's a process in that too. And it is like, I actually used to sell investments. I was a securities broker. And I would explain to people, if you're buying a mutual fund or some type of a long-term investment, don't look at it every day, because it's like trying to watch your grass grow. If you cut your grass on Monday, you're not going to see any growth by Tuesday or Wednesday or Thursday. But if you leave it for a few months, it's going to look like a forest out there. And it's the same thing. You have to set it and forget it, make the decision, pull the trigger, let your team do the work in whatever state that you're working in. And then you let it go. And then all you do is you evaluate it once a quarter or however you do your business management. And then all you can do is make the best decision that you can do. But I didn't go into this thinking, we're going to make $500,000 in 12 months. Who does it? That's ridiculous. Nobody does it. And I think if people are not willing to take the time to do the research and then ultimately pull the trigger, they'll be sitting on the sidelines. My biggest regret is that I didn't meet you 10 years ago. Yeah. Oh, I mean,
Right.
I'm glad we took action. And like I said, I did my research for two months, hired you, and then within another 2 months or less than that, we were in escrow and closed within less than 4 months of hiring you as a mentor. And I qualified you too. So that was important to me. I had to know who I was working with. So I did
Mhm.
my research on you as well. And I have not regretted it, and I would not look back. I haven't looked back on any of the properties we made and think, oh, I wish I wouldn't have gotten that property. Because like I said, they've all gone up in value just in the 2 short years that we've had most of them. They've all gone up in value. And you know what? Here's the other thing. Even if they don't, because I think a lot of people hear the noise, what if there's a crash in the market? Who cares? Your tenant is still going to be living there. They're still going to be paying rent. You don't have to worry if the market goes up, down, sideways, unless you plan to sell it that year or whatever. Then you might have to wait, but you still have the tenant paying the rent.
Exactly. Julie, you're absolutely right. A lot of people are paralyzed by all the social media, all the headlines out there from the YouTube crash brothers out there, the crash porn videos that captures people. They prey on the fears of a person.
Right.
So those YouTube crash porn videos out there, they get the clickbait by continue on a daily basis. They say, "Oh, there's a housing crash." They've been saying housing crash for the past 13 years,
Right.
and they've been wrong for the past 13 years. Those housing
Exactly.
crash bros out there, and one day they can be right, but it's not going to be today.
What do they say? A broken clock is right at least twice a day. They
Yeah,
might be right one day, but still, I was born and raised here in California. I look at the house that I'm living in now is the property that my parents bought in 1967 for $30,000. And now it's close to $2 million. It's There's no wrong piece of property to buy. Even if you bought a piece of land and sat on it, it would be worth more at some point because somebody's going to want to buy the land. So I think it's a fear because it's a big purchase, but I think it's just taking the time to do the research. And I'm going to tell you, we will research buying a cell phone more than we will research preparing for our future, preparing for our retirement. I think that's what the problem is. We spend so much time in the minors. We major in the minors, you know, you know what I mean?
yeah,
Instead of majoring in the major things that are going to be life changing for you. Which cell phone is the best? Who cares? They all call. And you're talking about a life, something that's going to change your life, and not just your life, it's generations.
yep.
Because you can teach your kids to do that, and your kids to do that. Isn't that how all the wealthy people got wealthy? The Rockefellers, the Kennedys, everybody. They left a legacy for the generation behind them. So it's not just about what Mark and I are doing. It's what is going to happen for our daughter. Yeah, eventually
Yep.
her kids, if she has any.
Very good. As we conclude this particular module, yes, the takeaway is that, yeah, people are just mesmerized by the negative headlines. People are paralyzed by the doom and gloom
Yeah.
out there. And the doom and gloom out there, the crash brothers are really affecting people's decision-making process. Human
Yes.
beings are very fragile. They get affected by all these kind of negative things. And it's just so sad. And on the other hand, as a real estate investor, we like it this way because right now we buying investment properties
Yeah.
in good areas with little to no competition, and we lock in the purchase price, we lock in a decent rate, and then even in this high mortgage rate environment, it's not about when you invest in real estate, it's not about the interest rate. You look at the whole big picture. You look
Right.
at the interest rate, the mortgage payment is part of your debt service as an investor, is part of the monthly expenses. If you can buy a cash flow properties in a good market, in a growing market,
Right.
in a market that I've been promoting all these years in the South and Southeast, in a Midwest, you surround yourself with a good team, with a trusted
Yes.
team, then you invest for the long term, you're in good shape. But again, people think about recession, housing crash, housing correction, inflation, and the banking crisis, and all the weather related issues, and all these
Right.
negative headlines. And yeah, I believe the advent of the social media and the negative headlines are really paralyzing many more people than we realize.
Yes,
And
I think
it's
so too.
is really sad because, and then right now, savvy investors like you and I and a handful of others take action right now. They're in good shape because even at a high mortgage rate environment, imagine when the mortgage rate comes down from 7.2% right now to 6% to 5.5%, we can have a housing frenzy in the future. The people that are waiting right now, whether you are an investor or primary homeowner, whoever you are out there, if you're waiting for the perfect time, hey, look, there's no such thing as a perfect time.
Right.
If you're waiting for the interest rate to come down, you might be waiting for a very long time, and you and other people are waiting on the sideline. But let me tell you, you and I need to take the herd mentality, HERD, herd.
Yes.
The way I defined herd mentality is that whatever the masses goes one direction, you go the opposite direction.
Right.
Yeah, do not follow the herd.
And no, I agree with that. Because I can tell you, when we started talking about doing this a couple of years ago, most of our friends thought we were crazy. And I'm like, I believed it for myself. Maybe you didn't believe it for yourself, but I believed it. We pushed through, we followed through, we did the work, and we are in a really good position to realize and achieve our goals. And I'm just thankful we did not wait another 2 years and try to get all this information. Because like I said, you can get information to talk you into it or out of it, depending on which website you're looking or which news media you're listening to. So my encouragement to your students, turn off the news, stop listening to the gloom and doom, and just make a decision. That's my final word. Like you said, pull the trigger, make a decision, because nothing happens without a decision.
Yep, I agree. As we conclude this our time together today, so yeah, you're absolutely right. If a person want to make a difference for themselves financially, want to create generational wealth, it's time to take action. There's no more excuses, right?
Exactly. There really isn't. And I will say this last thing too. With the onset of the internet and being able to access information so quickly, that is what has allowed us to buy the property. Because just so your customers or your clients know, we have never been to New York. All of our properties are in upstate New York, and we have never been there other than looking at it through a Google map. So that there is a big advantage to the internet because we were able to do all this through a computer and telephone.
Yeah,
That's a big plus.
Yeah, is a find a team, find a trusted team to surround yourself with,
Absolutely.
and work as a team and grow long term, and everything will be fine. There's a blueprint for success, and you are following.
Absolutely.
You have the right personality as an investor. You have the right skill set, and you need a skill set to become a successful long term investor. Yeah, just
Absolutely.
having money to buy investment property, that's just part of the process. It's not.
Right.
No, that does not is not the only thing you need.
That's exactly right. Absolutely.
Well, I think we're pretty much done. Really, thank you for your time.
This has been good. Thank you for having me.
Yeah. You're welcome, Julie. We'll see you next time for another episode in the future. We can invite you back to talk about other topics. Thank you so much, Julie. This is
Thank you
Seewing.
so much. It's been a pleasure.
This is Seewing Yee. Thank you so much for listening. Have a nice day, everyone. Bye-bye.